We did see markets pulling back from all-time highs today, a bit of a cautious tone from investors with a lot to consider. There is a government crackdown in China, investors still concerned about the global economic recovery, and we also get a Fed announcement tomorrow with COVID cases on the rise in the U.S. Now, the NASDAQ was the biggest loser today by a fairly wide margin, and shares in Tesla a weight on the NASDAQ after second quarter earnings did beat expectations. But as one analyst puts it, the company's high valuation leaves little room for less than perfect execution. The earnings report did have several high points, like the first billion-dollar quarter in net income, but then mixed comments from CEO Elon Musk left many questions unanswered. The battle for a U.S. railway by two Canadian companies continues. CP Rail says it will continue to pursue the acquisition of U.S.-based Kansas City Southern. Now, that statement comes after a U.S. politician sent a letter to the U.S. Surface Transportation Board opposing CN's request for a voting trust. CN and CP have been locked in a battle for control of the U.S. company, and CN emerged as basically the frontrunner back in May. Now, shares in CN Rail moved higher today, while CP Rail stock was lower, with CP Rail set to report earnings tomorrow. And it's been rumored for months. We finally got confirmation from Disney today that it's going to shut down most of its Canadian brick and mortar stores. This is the latest move in a push to e-commerce. Back in April, the company would not confirm that all Disney stores in Canada would be shut down. And then today we learned it's actually going to close at least 60 stores across North America, including most of its locations in Canada. Now, the store locator on the website shows that 2 stores in Ontario will remain open. There are no details yet on the e-commerce presence. A Disney spokesperson says, simply put, the pandemic changed what consumers expect from a retailer. In the 680 Business Center, I'm Kris McCusker.